is Frank Aibogun. I am a publisher of Business Day. What a delight on a very bright morning in Lagos to welcome you to our 2020 series of our Capital Market and Investment Conference. Today, the conference is by way of a digital dialogue, a virtual convening as a result of the very unusual times that we are in. But thankfully, we see evidence, very clear evidence suggesting that the ravaging of the pandemic is easing around the country and even more so in Lagos. I was looking at a graph done by one of my colleagues in the office this morning, and it's such an impressive thing to look at. And we even also try to check up on cost of things like gloves, hand gloves, face masks, and all manner of things. Even the thermometer that went up as high as 80,000 naira in Lagos, the prices have all crashed, all an indication of the improvement in the environment. Today, our conference is one that focuses on a number of issues. We would have a conversation with the Director General of the of the Securities and Exchange Commission, who I am happy to say has since joined us. We would have the CEO of the Nigerian Stock Exchange, Oscar, give us an opening remark. And then, of course, a number of presentations that will be made later, one by Eric, who's joining us from London, and then, of course, Haruna Jallo Waziri, the CEO of the Securities, Central Securities Clearing System. We have two panel sessions, very interesting, given the themes that they will be exploring. Our first panel will be titled Row, Row, Row Your Boat, an Investor's Guide Through Choppy Markets. And of course, our moderator will be Bolanle. And then we would have a presentation by Guy, the head of research at Coronation Asset Management. And his presentation will be focused on rediscovering risks. And Guy will be helping to calm us down, because he believes it's not as, we will see whether that's it. He believes it's not as bad after all. Then, of course, there will be Nee's presentation. And then we would have the second panel, which will be moderated by Tosi. And thereafter, we will seek to bring today's conversation to a close. We will not have been able to do this morning without the support that we have received from our very, very strong partners in the Nigerian Stock Exchange, EFG Hemis, Commercial Partners, VFD Group, Sky Trustees, Alliance LP, FBN Quest, and of course, Ancoria Asset Management. My task this morning is a simple one. It is to welcome you all warmly to our 2020 Investment and Capital Markets Conference. I think I've done a good job at that. Permit me now to acknowledge the presence of the Securities and Exchange Director General, and to say that in the course of today, I will have the privilege of a short fireside chat with Lamido, just to explore what his key goals are for the capital market. So, ladies and gentlemen, you're welcome. Thank you so much for joining us. It's a bright morning in Lagos, and I have absolutely no doubt that the time you spend with us today will be for you a good and fulfilling time. Thank you so much for joining us. And I think at this point, I'll yield the floor so we can take a message from the CEO of the Nigerian Stock Exchange, Mr. Oscar Oyema. Thank you. I think you are muted. You are muted, Rolly. You are muted. We're not hearing you.
Yes, sir. For the opening remarks, it is now time for us to listen to the presentation from the CEO of the Nigerian Stock Exchange, Mr. Oscar Onyema.
Distinguished ladies and gentlemen, if there is any good thing that we can take away from these unprecedented times, it is the ability to adapt to globally evolving digital trends, which is why my recording now seems permissible in today's world of virtual engagements. I am pleased to be here today at the 8th Investment and Capital Market Series organized by Business Day. I must thank the leadership of Business Day for putting together such a high-impact conference, The Borders on Nigeria's Capital Market and Economy, which I'm honored to address. This initiative is laudable as it is necessary to engage in conversations on the nation's economy, especially as we are in unprecedented times, evidenced by high volatility, uncertainties, and fears of looming recessions across the globe. I should start by reminding us that two essential parts of a nation's economy speak to the direction and capacity of trade and investment. These two elements are intertwined such that it is unlikely one survives without the other. Suffice to say, without investment, trade is limited, and without trade, investment is likely useless. This again is why I believe this initiative is timely and one that the nation needs at this time. 2020 is a unique year in so many ways. And it is not surprising that this Nigerian stock has changed. The COVID-19 pandemic has resulted in a decline in oil export earnings, which accounts for over 80% of Nigeria's export earnings, and remittances by Nigerians in the diaspora. Concurrently, foreign portfolio investor flights to safety has further intensified pressures on the nation's. However, despite the highly volatile macroeconomic environment in Nigeria, the Nigerian Stock Exchange has remained resilient. Surprisingly, domestic investors have risen to the occasion in sustaining equities market performance. The low yield environment has positioned the equities markets as a credible investment option for domestic, institutional, and retail investors. This year, domestic investors have accounted for almost 60% of the trading activity, compared to an average of 51% in the past 4 years. Despite obvious economic headwinds, the NSE All-Share Index, for instance, rose by 16.39% in the month of April, ranking it the second best performing index in that month, according to Bloomberg. The NSE All-Share Index at the end of August returned month-on-month gain of 2.47%, and the equity market cap currently is at about 13.2 trillion naira. While we have witnessed a slowdown in equity capital raising due to the impact of the pandemic and decline in oil prices, we have seen increased capital raising activity in the fixed income space as a result of the relatively low interest rate environment. In Q2 2020 alone, we saw new corporate debt issuance valued at 203.5 billion naira, as well as 567.39 billion naira in government debt listed on the Nigerian Stock Exchange. As at today, our bonds market capitalization is 16.2 trillion naira. We have also seen a growing appetite for alternative asset classes from investors. Similar to the growing demand for gold and gold ETFs, the new gold ETF listed on our bourse since December of 2011 has enjoyed considerable traction since February of 2020, pushing the ETF cap to 14.5 billion naira. When COVID-19 hit Nigeria, our business continuity framework was activated with daily monitoring and assessment of the situation. We ensured that temperature checks were done daily and provided hand sanitizers and health guidelines on all floors of the exchange. Subsequently, on March 25th, the physical trading floors of the Nigerian Stock Exchange across the country were closed and have been that way with our staff fully migrated to remote working and the broker-dealer community fully migrated to remote trading. Yet more than ever before, the exchange has been open for business, giving issuers and investors a platform to access right-sized capital in the toughest of times, whilst providing opportunities for secondary market trading activities across our multiple asset classes of equities, bonds, and exchange-traded funds. The NSE's technology platforms have supported our dealing members in trading remotely every working day without incident via our electronic platforms, such as our fixed protocol, our XNet platform, and our newly implemented virtual private network. In some quarters, I have called this business unusual, as this is the first time in our history that our staff are stationed for work remotely as we continue to double up on efforts at ensuring that the exchange remains a beacon of hope and business continuity for the Nigerian economy, even under such trying times. Our short-term plan was to protect our internal and external stakeholders from the exposure of COVID-19, ensuring our stakeholders' experience engaging remote working and remote trading remains seamless. I personally updated employees on a weekly basis of all the actions being taken to ensure first their health and safety, as well as palliative measures being considered for their sustenance. We also scaled up and leveraged our online learning management system, the X Academy, to remotely deploy capacity development programs both to our employees and to our ecosystem. With the lockdown and restrictions in movements, we alerted issuers to avail themselves of the relationship management tools and regulatory filings via our issuers portal, popularly known as X-Issuer. We also initiated a CEO virtual courtesy call to our listed companies in order to bring the exchange closer to them in every way possible and understand their concerns with a view to resolving them. We engaged with the federal government and regulators on issues of annual general meetings, maturing financial instruments, financial reporting, to mention a few, in order to secure the right regulatory actions and responses for the benefit of our ecosystem. In the middle to long term, as we continue to ensure that we provide all that is needed for our stakeholders to work and trade seamlessly from their various locations across the country, we continue to monitor the pandemic through our Business Continuity and Crisis Management Committee. We are also focused on delivering the demutualization of the Nigerian Stock Exchange, which is currently at its final stages. The demutualization of the Nigerian Stock Exchange will see the exchange transition from a company limited by guarantee to a company owned by shareholders. Some of the benefits of demutualization are the creation of more opportunities for investor participation, improved corporate governance, access to broad pools of capital, and technological innovation, amongst others. With demutualization, the exchange joins the league of exchanges in the world with global competitiveness, which will adversely lead to increased global brand and visibility of the NSE for the benefit of the nation, particularly as it concerns the development of the capital market and the economy. The Nigerian capital market itself has been undergoing a number of developments guided by the Capital Market Master Plan, which is halfway into its implementation. The plan promises to enhance investors' confidence, improve liquidity, and create an enabling environment for the creation of new products. I'm delighted that the DG of the Securities and Exchange Commission, Mr. Lamido Yuguda, is here and believe he might speak further on this ambitious plan to transform Nigeria's capital markets. Popular concerns of our stakeholders this period have been access to Forex, with other concerns bordering on current economic projections and stability of the Naira. Because of this unique situation occasioned by COVID-19, and to ensure the stability of the Nigerian capital market and recovery of losses, I use this opportunity to again send word on policy inclusiveness to the government for consideration. One of such recommendations is to expedite the unification of the exchange rate by converging all foreign exchange windows to the investors and exporters rates in order to boost foreign and domestic investor confidence in government's commitment to economic sustainability. We believe the government should also ensure regulatory forbearance with focus on pandemic alleviation schemes, such as reduction of tax burdens for already compliant organizations, mainly listed companies, delayed implementation of any new taxes at federal and state levels, targeted intervention for local companies across sectors most hit by the pandemic, and fast track of other investment attractive legislations, such as the Pension Reform Act and the Investment and Securities Act, which are currently being reviewed. I should add here that the recent CAMA that was assented to by Mr. President sends the right signal of hope for the improvement of the ease of doing business in Nigeria, which will accelerate the development of the nation's economy, and the NSE is proud to have contributed to this effort. Finally, on recommendations to the government for the benefits of the capital markets, one of them would be the expansion of the framework of public-private partnership for infrastructure development. For instance, prioritizing the incorporation of the CBN infrastructure company, Infraco, and subsequently listing its 15 trillion naira fund on the Nigerian Stock Exchange for effective reporting, governance, and other global fund management standards. And 2, converting the road investment tax credit scheme into NSE tradable tax credit notes to further incentivize private sector participation in Executive Order Number 7 on road infrastructure development. As I round off, I leave us with the old investment adage, which is to focus on time in the market, not timing the market. Many times, investors are bothered about the right timing to take an investment action. However, one of the reminders COVID-19 has given to the world is no one can adequately predict what would happen. Whilst it is necessary to prepare for shocks wherever, it is also beneficial to stay invested for many years. As we navigate the rest of 2020, it is necessary to play the long term, keeping abreast of information. The NSC's data services are available to help you stay abreast of market development, and the X Academy, our learning management program, is available for capacity development on several levels of professional and personal development. Again, we should remember that it is time in the market and not timing of the market that counts. Once more, I thank the board and management of Business Day for inviting me to participate in the discussions today. I wish the speakers, expert panelists, and distinguished ladies and gentlemen fruitful deliberations at this summit. Please stay safe and remain connected to loved ones. Thank you for listening.
Thank you, Mr. Onyema, for the insightful presentation on developments within the Nigerian Stock Exchange. As we proceed into our discussions, it is important we also hear from regular investors to know what issues they consider pressing. At this point, I would like to invite Mr. Kalu Aja. Mr. Aja is not only a distinguished career in asset management, he's also a foremost commentator on financial planning, capital markets, and the Nigerian economy. We expect Mr. Aja to raise questions he wants addressed in the course of this conference. Over to Mr. Kalu Aja.
Hello, my name is Kalu Aja, and it's my pleasure to talk to you today on the occasion of the Business Day 8th edition of the Investment and Capital Market Series. First of all, thank you, Business Day. Thank you for doing this. We appreciate you. I want to talk about the Nigerian capital market and as my experience as an investor. 2019 was a bad year. We left 2019 with about a negative 14 return. And what struck me really in 2019 was the mobility of capital, that a Nigerian could in Aba have an app on his phone, say Trove or Bamboo or Robinhood, and he could move funds from Nigeria and invest in the US market. That was options. So the Nigerian investor is not really stuck anymore in Nigeria. If options are available, he would invest cross-country or cross-borders. Second thing was that fixed income returns in Nigeria were very, very good. So the investors had tons of options, not just across countries, but across asset classes. That affected the Nigerian capital market, and that really pulled us down. But it wasn't all bad news. I mean, the NSC has done a lot to try to broaden the scope of the market, and which is taking me to my next point. The NSC did launch the growth window and to bring in the SMEs into the market. Before I came here, I asked my Twitter followers, have you guys heard about the growth window? Not a lot had. And Not a lot. Not everyone that's heard about it during the lunch, but don't know what it is. I would say outside the professional stockbroking or stock market class of people, the market is still viewed with a bit of elitism. People think we just come here and we trade. They do not connect what the stock market does with what SMEs do in price discovery, raising long-term funds, and all that. It could be a combination of lack of information. It could be a combination of the high cost to get registered, the 50 million to get registered into the growth window. It could be both. But the point is that the NSE has this wonderful concept called the growth window, and the market doesn't know about it. And the market can only know about it if we tell them about it, number one, and if they see the benefit to then come to the benefit of basically being in that market. So I think my point for the whole conference is simple. Can we talk about how we can bring in more SMEs, more millennials into the market to get them to invest and success? I mean, SMEs are huge, 41 million SMEs all across Nigeria, employing about 84% of the population of Nigeria are employed by SMEs. This is a market that we must play in and we must drive and we must be a partner with. So I will say specifically to the growth window, can we review it? Can we bring down the minimum capital requirements up to say 25 million? Can we talk more? Can we get CBN to say, apart from doing just loans, can they do equity contributions, and can we tie those equity contributions to the growth window? Questions for the conference, and I wish you all a very, very good time. Thank you.
Thank you, Mr. Aja. We are sure your comments will be addressed in the course of this event. At this point, we would like to welcome Mr. Eric Renanda to come and deliver a presentation on Chasing Alpha on a Treadmill, a fund manager's view of trends and bends in the Nigerian market. Eric is portfolio manager at H1 EMIM Africa Fund in UK. Over to you, Mr. Renanda.
Really, thank you very much. It's really good to be part of the conference today, and I'm sorry I couldn't be actually in Nigeria. It's always fun to visit. I think I'm here to provide the perspective of a foreign investor in Nigeria. And I'll try and be as frank and honest as possible. And Business Days came up with some questions they put together that they thought would address the issues that you guys are all thinking about. So I thought I'd just answer some of these questions that they posed to me. The first one was, how do I think that the markets will recover from the coronavirus, and how are portfolio flows and money going to shift post-COVID-19, especially as it pertains to frontier markets? I think one thing, I just want to share some numbers with you about how money has shifted already this year. You've had $1.1 trillion going to money market funds. You've had $200 billion going to bonds, $70 billion into gold, and about $40 billion out of equities. So you can already see, well, I'll just say within equities as well, the 40 billion, you've had about $10 billion into international markets and $40 billion out of EM. So you see the broad outline: big move to cash, big move to fixed income, gold, and then a bit of a move out of equities. But within the equities, it's a little bit into international markets, developed markets, and then a little bit out of EM. So definitely a move to safer assets in those flows. Second, I think that as it pertains to frontier markets, it's important to recognize the crowding out that's coming from China. China is almost becoming its own asset class or its own allocation. You know, it used to be US, Europe, EM. That is now kind of evolving into the US, Europe / international, and then China in itself as an allocation. And then you have rest of EM, which would be like Brazil, India, Turkey. And then you have frontier after that. So kind of frontier is becoming at the end of a long list of major regions that people are allocating money to. So I think it's a little bit tough. It's going to put pressure on frontier market allocations. Also, as the firm I work with is associated with a private bank in Belgium So I get to listen to some of their investment committee meetings and what their private bankers are talking about. And the interest is definitely just in, well, say not just, but primarily interested in US tech, Chinese tech, and then when it comes to emerging markets, not much interest on the equities, but more into maybe the yield stuff. So definitely there's that pressure in Europe and around the world that there's 0% yields or negative. And so they do look to emerging markets for the yield. So I think that's the outlook for the frontier markets. The other question they asked was how my framework, my investment framework has changed post COVID-19. The framework is still the same, how I look at investments. The one new change is on the regulatory side. I run a European fund with European regulations. It's called a UCITS reg fund. And the European regulators are being a lot stricter on liquidity. They don't like the idea of funds that are saying they have daily liquidity, but the underlying assets are not that liquid. So starting in September, we have to start doing stress tests, liquidity stress tests as a fund manager, which that never happened before. So I think that maybe puts a little bit of, would make fund managers a little bit more cautious about frontier markets or less liquid markets, because there's going to be an extra scrutiny now on the liquidity of the investments. So the third question was, has investing in Nigerian treasuries lost its appeal? And what are the realistic options for government and corporate borrowing in Nigeria? And I would say the appeal around Nigerian treasuries has definitely changed. I used to be very interested in that market. I jumped in 2017 when the Naira devalued and the rates were 20%, and they might have been higher. And so I owned the Nigerian treasuries up until February this year, when I made a trip to Nigeria, and I got anxious that there was going to be currency problems. And so I sold all my equity and T-bill positions in Nigeria in February. And yeah, I think the FX policy of the CBN has really it's really hurting the attractiveness of the Nigerian market in general, both on equities and fixed income. And also, even if you wanted to take, as a foreign investor, even if you wanted to bring your money into Nigeria with the risk and unknown of when you're ever going to get it out again, the 2% yield isn't enough to compensate for the likely Naira devaluation. So I think, yes, that has killed the attractiveness of the T-bills to foreign investors. As far as Nigeria's funding ability going forward, it's probably going to be like what we've seen in the rest of Africa, or for many countries in Africa. It's a mix of tapping your local market as much as you can to the banks, hitting the euro dollar market, which is still open, and people would buy Nigerian euro bonds, and then is also trying to borrow as much as you can from the IMF and the World Bank. I think people are worried about corporate financing in Nigeria. I would imagine that with 2% treasury yields, the banks should be quite open to lending to corporates. So I think they're going to be pressured. I mean, obviously there's a risk-off environment, the economy stuff, but they're going to be under pressure to earn yield, and so I think they will want to lend to corporates going forward. The next question was, what is your view on the recovery paths of the two giants of the continent, Nigeria and South Africa, especially since both slunk into the disruptions of 2020 in already weakened economic positions? What are your thoughts on their recovery paths going forward? I'm a bit optimistic on South Africa. They've had, they elected Cyril Ramaphosa 2 years ago in 2017, the end of 17, and people have been frustrated that there haven't been the high-profile arrests that they really are hoping for, but there's been a lot of groundwork to change out leadership positions throughout the government. For example, the head of the National Prosecuting Authority was fired. The head of the Tax Revenue Service was fired. They changed out the entire board of directors of the Public Investment Corporation, changed out the management of the power company, Eskom, changed out the management of Transnet. And they're put the big airline, South African Airways, into administration, and that's either going to be shut down, but probably more likely spun out as a smaller airline. So I see a lot of changes. It's hard work. The corruption was obviously endemic throughout the government, And it's, they say it's easy to break things down. It takes a lot of work to build things back up. So, but I think, I think South Africa is making progress, and the wheels are turning in the right direction. So I'm kind of optimistic there. Nigeria is less, it's harder. It's a mix, more of a mix. The positives on removing the fuel subsidies and changing the power prices to make them more reflective of the actual cost of power. Those are positives. But then the negatives are around the FX policy right now, closing borders. And so it's tougher to see with Nigeria. I think it's going to be, it's maybe in a holding pattern right now in terms of the outlook going forward. So a bit more optimistic on South Africa, I'd say. And then going from that, what mega trends do I see shaping the sub-Saharan Africa going forward? I've got quite a negative view just generally on the overall outlook. We're in a very negative, very big recession globally, and we were kind of weak coming into this. And I think we're going to be very slow to come out of this just globally. So I think there's a lot of headwinds for Africa just coming from the rest of the world. But the positive thing is that Africa might outperform the rest of the world going forward. I mean, theoretically, on paper, Africa is coming from a very low base, very responsive to changes in efficiency. There's a lot of opportunity to make things more efficient in Africa. So on paper, Africa could grow even if the rest of the world isn't doing so very well. So that's a reason to be optimistic. But otherwise, I'm also kind of positive on the leadership changes I'm seeing across the continent. Basically, the real bad guys you're seeing kind of eventually get changed out, and you get better leaders. A lot of pressure from the youth with social media to improve governance, reduce corruption, which you are seeing still there, but you do seeing a lot of pressure on corruption. So I think generally you're seeing better governance across Africa. And then finally, I'm optimistic about the Africa Free Trade Agreement. I mean, amazing that I think it was 52 countries signed this agreement, and people are skeptical of what it will amount to. But it does start to lay the framework for increased trade within Africa, which could be a real big, one of those, very powerful trends that exerts itself over the next 10 years. And maybe you don't feel it in Lagos, but there has been quite a bit of an investment in infrastructure around the continent, in new train lines, ports, roads. Still lots of work to be done, but there has been some improvement on this. And so I think trade could be something that does be a mega trend for sub-Saharan Africa going forward. And finally, the mobile economy, I'm very bullish on. There's been a lot of innovations in mobile economy, mobile payments, and I think that's really creating a great opportunity for people to educate themselves, get new information in ways they couldn't before, and also interact and do business with their phones, which we've never seen before in the development of emerging economies. So I think that's also that trend is a big one too. The next question was, what is my view of the Africa Rising theme? And do I worry that maybe we're going to lose the gains of the last 2 decades? I would say, I just want to say, I think the Africa Rising theme is kind of feeling a bit dead right now. And we recently had a redemption from one of our investors, a Danish, I think it was a Danish fund, and they sent an email with their redemption request. And I just wanted to share the comment. I thought it was indicative of maybe, I have my views. I think the theme is quite not holding up very well right now. But then this investor wrote, "We have decided to terminate our investment in the Duet Africa Index Fund. We have been in the fund for almost a decade, believing that a positive economic development would eventually reward us for our patience. That has so far not happened, and we fail to see that the situation will change anytime soon." So this is someone that's been invested in Africa for 10 years, and they finally just given up and want their money back. So I think that was pretty indicative of where the Africa Rising theme is for investors right now. But I think it can happen. I think we're not going to give back the gains of the last 10 years. The pace of reform, pace of Africa Rising theme has been a bit disappointing, especially relative to other regions in the world, especially Asia, the changes they've achieved over the last 10 years. So we have a lot of work to do, but I think let's just do it. Let's just act, focus on acting, focus on fixing things, reforming things. And then in 10 years from now, if it has happened, then we can write newspaper articles about it. But I think for now, we should probably just not talk about Africa Rising and just focus on action. Next was, what is the current view of the HIEMIM Africa Fund to securities investing opportunities, both debt and equity in Nigeria? And how are you shifting positions across the alternative opportunities across the continent? So as I said, I was in Nigeria in February and ended up selling all my positions, nervous about the oil price, nervous about the currency. And so we currently have any investments in Nigeria. Our fund is highly regulated with weekly liquidity, so I don't know what to do. I mean, it's hard for me to come into Nigeria when I just have no idea when I'm going to get my money out again. I think the regulator would probably put me out of business if I did that. My biggest concentration is in gold miners in West Africa and South Africa. I believe there's a bull market right now in just fear, anxiety, debt issuance, and bad government policy. And I think those are all kind of bullish for the gold price. We do have some investments in the mobile economy. As I said, I'm really bullish on that. We do own MTN, which you guys will know well. So I am bullish on mobile economy and mobile payments. And I've been reluctant to invest in African government debt. I think we saw I've been concerned about, I think African government finances in general are very fragile. And I've been concerned by how much a lot of these governments have tapped the dollar market. And I think it makes the country very fragile, very sensitive to the dollar strength. And so I think we see that the finances are in tough state, and with the coronavirus, there was an attempt by quite a few governments to maybe not pay their interest and payments on the euro-dollar bonds, which I think was indicative that this is, where it made me cautious on the market. And so, and generally, I'm very cautious with the fund because I think we're possibly in the early stages of a longer recession. So that's how we're positioned in the fund. We do have about 15% of the fund in U.S. Treasuries, just rather than owning the government bonds. It's not much yield, but I feel like it's safe. So what has been the fund's source of outperformance? Since I started the fund in March 2015, the S&P Africa Frontier Index is down about 32% in US dollars. So Africa is down about 32. The fund is up about 15% in dollars. So that's 47% outperformance over the 5 years. I'll tell you, investors in Europe and the US don't really care about making 15% over 5 years. They think that's kind of unimpressive. They'd rather own the S&P or the NASDAQ, especially. But relative to Africa, it is pretty good. And the key things have been really missing the big sell-offs. I was very skeptical of the African consumer sector in 2015, all the beer stocks and food stocks trading at 30, 40 times earnings with not that much earnings growth. So I avoided some of those things. I avoided the big currency devaluations and then caught a few upturns, mostly in the mining sector. And this year in gold mining. So that's kind of been how it all came together. And so so those are the main questions that the Business Day guys put together, but I wanted to share a few comments, just some final other thoughts. And maybe I sound a bit, dour on the markets, but I wanted to say this is a good time for Nigerians to invest in yourselves and in your local market. I've done a lot of work with Zimbabwe and know a lot of Zimbabweans and people I'm working with that are making a lot of money in Zimbabwe. And when foreigners leave the market and don't come in, it can create great opportunities locally for you. And so I think maybe really look around at your local companies. There could be some great valuations and great opportunities there. Especially if you're already in Nigeria. And also it sends a good sign to foreign investors when when local investors are investing. Because you always want to see that the guys on the ground are bullish too. The second thing is that I ask people, I say, hey, what do you think is the best performing stock market in the world? And, I don't know, they might say the NASDAQ or something, but Zimbabwe is up 860% in the last 2 years. Yes, it's come with a lot of currency devaluation, but just pay attention that this could be a setup for Nigeria too. I mean, maybe the Naira is going to go to 550, but maybe the Nigerian stock market's going to go to 50,000. You guys could easily have a double in your local stock market. So you have a lot of banks on 2 times earnings, markets highly depressed, but generally when currencies devalue, the local stock market goes up a lot. So I would say you could be sitting in front of a great opportunity yourselves with your own local market. And then finally, I would just point everyone to pay attention to the innovations in the blockchain and crypto technology market. I've been looking at it myself and super amazed at what's happening there, and I don't think many people are focused on it. And I also think it's particularly relevant to Africa. I think in countries where it's maybe harder to access the financial system or there's restrictions on liquidity in the FX market, it's very attractive to be able to use decentralized finance applications like Bitcoin, Ethereum, and everything that's happening around that. And same way that Africa is a lead in mobile payments, I think it could be a leader in the adoption of blockchain technology as well. So I would just suggest to people, if you are not paying attention to the innovations there, just start acquainting yourselves. And that is it. Thank you very much.
Thank you, Mr. Renanda, for sharing your very interesting perspectives on the African markets and particularly the Nigerian market. It was a learning session. Thank you. At this time, we would now introduce the anticipated fireside publisher, Business Day Media, Mr. Frank Aikogo. Thank you.
Thank you so much, Rolly. I hope the DJ is still with us. I saw you earlier, so I imagine you're still with us. And let me just thank you so much.
Thank you very much.
We will be spending the next 25 to 30 minutes just having a chat, very simple chat in which I will ask a few questions and give you a time so you can answer those questions that we think will help shine the light on the work that you're doing as the regulator of the market. So once again, let me welcome you, sir.
Thank you very much. Good morning, Frank.
Thank you, sir. Thank you so much. Maybe we can start. Let me ask you, you have only recently taken up this position as Director General of the Nigerian Securities and Exchange Commission. Can you just help us outline your agenda for the capital market, sir?
Thank you, Frank, and good morning. Yes, we have just assumed, I assumed duties on the 6th of July this year.
Yes.
Together with a brand new management team for the commission. We have, outlined as our key priorities, essentially a 5-point agenda. One is boosting the commission's operational efficiency. The commission needs to be, really sound in order to provide the kind of regulatory support that the market needs.
Yes.
Second is the continued implementation of the Capital Market Master Plan. We have a Capital Market Master Plan 2015 to 2025. This is halfway into that period. We have achieved, a number of initiatives outlined in that plan, but we still have a number of initiatives that need to be, pursued, and we are going to pursue those, vigorously. This plan is currently in the process of a kind of mid-term review, and we intend to look at some of the assumptions in light of the current economic realities, but we intend to pursue this plan to the fullest, possible extent. We intend also to restore investor confidence. This is a market that has really seen a lot of investors leaving the market for the past 10 years since the financial crisis. We have an average age of the CSCS customer at above 50 years, which means a lot of young investors are not really in this market. So people who have come of age and who have started some kind of economic life are not investing in this market. We have less than 400,000 CIS accounts, that is collective investment schemes accounts, for a population that is over 200 million. So that means that there is really a significant amount of work that needs to be done to increase the take-up of investment products among our population. We also want to improve the investor experience. You'll agree with me that capital market transactions are not exactly easy, at the moment. It is easier for you to open a banking account. Now, you know what happens on a banking account, but it is quite difficult for many of us to read through an investment account and the various transactions. Plus, the stages that an investor needs to go through to get, for example, just to buy some equities. It involves a lot of things. We want to simplify this process so that the experience of investors is really kind of very seamless. Then we want to improve the capital markets visibility and attractiveness. Visibility to policymakers, visibility to investors, visibility to issuers, and also the attractiveness so that there is a value proposition for those who decide to participate in this market. So this is really our agenda for the market. And we expect out of this process to have an increased perception of the Commission and of the market as a whole, a strong regulator that provides leadership to the market, CMOs, that's capital market operators, that really comply with our laws, our rules, and our regulations, with the incidence of market violations reduced to the barest minimum, so that investors will be confident that this market is actually for them and not for the operators, and a market that is really the first or the preferred investment destination for investors, both domestic and foreign. We also want a capital market that contributes significantly to economic growth. And I think this COVID pandemic has really shown us that we need to do a lot more in this area. We need to provide infrastructure for our people, especially at a time when you see a lot of countries just closing their doors to other nationals. You need to make sure that you are self-sufficient in the area of infrastructure, whether it is roads, education, health, transportation, and the like. So these are things that the capital market can actually provide. And we have the funds to actually do that. But we just need to make sure that the capital market provides the kind of vehicles and frameworks, that will attract those people and those institutions that have the money to invest, in those vehicles. So we want, in a nutshell, to be a regulator that is really a reference point in the whole of Africa. We do engage with other regulators in the continent, and we want the SEC to really be at the top of that league. This is our plan.
Thank you very much, DG. Thank you so much. So let's go on. As we all know, the COVID-19 pandemic came with a sharp fall in the price of oil, which is Nigeria's main revenue source. There is an abundance of data that suggests a correlation between oil price and equity prices or equity valuation in Nigeria. We're seeing regulators around the world aim to support markets with policy interventions and regulatory interventions. In your view, what more should we be doing in Nigeria in that regard?
I think in Nigeria, we have really a market that, has two, major things. One, we have a market that has a preponderance of foreign investors, such that when they leave for any reason, you find that the market actually suffers a lot. You have also a significant number of institutional investors, domestic institutional investors, for example, the pension funds, who are awash with money at the moment, but that invest very little in the capital market. Okay, they invest actually much lower than their, strategic asset allocation limits, for the capital market. And then we have domestic investors, that's the personal investors, who, because they have been significantly hurt during the 2008-2009 financial crisis, have left the market in large numbers, and many of them have not returned. So this is really the situation that the capital market in Nigeria is facing. Oil price is an important determinant of economic activity in Nigeria, because we are an oil producer, and the government fiscal policy is very much dependent on oil. But I think there are pools of autonomous funds within Nigeria today that, if they should allocate just a little more to the capital market, you can see a significantly much better performance in capital markets. So we are trying to now have those engagements, trying to talk to ourselves within the capital market to say, what is it that we should do in terms of improving our investment vehicles, our investment products, so that pools of money like those in the pension fund industry are able to actually find value in the capital market. What is it that we need to do to attract back the investors, the personal investors that have left this market, and many of them have not returned? Remember, in the last 10 years, a significant number of young people have started economic lives, but many of them are not investing in this market. I was just talking about the average age of the CSCS client. So the average age of the person who holds shares in Nigeria is over 50 years old. So that is really a very, disturbing statistic, seeing that this is a very young country. We have a population that is predominantly young, but then we have investment in the capital market that is predominantly undertaken by people who are really almost past the age, of economic usefulness. So I think this is an opportunity for the market. If you can just make the right moves and attract back a small part of these investors who right now are not investing, in the market, you can really have a massive rebound in the fortunes of the capital market. And come to think of it, we have only two markets essentially in the financial sector. Okay, you have the yield curve. Okay, the shorter end of the yield curve is the money market. Yes. The longer end is the capital market. Now, this is the market that you and I and our children basically have to invest our savings, for use, in the future. So we do not have any other option than to really look at this market and then try to perfect, whatever is wrong with it, so that we can have a market that really is able to provide the kinds of savings investment that we need in order to provide for a rainy day. Okay, we have pensions. Pensions are meant to be invested for a very long time. You cannot invest pensions in the money market. You need the capital market to do that. So really, if we do not invest in our own market, if we allow the vagaries of foreign exchange that actually is the key determinant of, for the foreign investor who basically runs away from the market at the slightest possible hint of a foreign exchange difficulty, then our market will continue to suffer. But when when we know that we are investing for the long term and not for just, the next 6 months or the next 1 year, then you see that the capital market is really the market for us, and we need to do more to support that market. So we are engaging with operators, with the various capital market infrastructures, but also with policymakers and with pools of institutional investors to make sure that this message is passed along, and to make sure that this market comes back, and gets the local content, that is both local investors that are individuals and local investors that are institutionals, to really come back into the market, so that we can really move forward. And then we can use these pools of money to create the infrastructures that we need. We know how many children are now back in the country because their schools are closed in the countries where they are studying. Okay, if you had all these universities and colleges out here in Nigeria, and we really need to have more of this, kinds of things. We know how many people will have been in foreign hospitals at the moment, but because of the pandemic and the difficulty of movement, most of them are here, and you can hardly find a hospital bed in places like Abuja or Lagos, because we are all using the limited medical facilities that we have. These are the kinds of things that we should use our money to invest in, so that this place becomes a destination, even for other people to come and enjoy these facilities, not that we just have a kind of one-way traffic of our people to other destinations where they go and enjoy these services.
Thank you so much, sir. I am happy you alluded to the PFAs and how it is that, because we all know the sacrifice made by our leaders and those who work tirelessly to launch the contributory pension scheme. And we know how successful it is today in terms of the size of the total contribution. Except, of course, that we also are aware of the pain and frustration with the way that contribution is being deployed. The idea was to create a large pool of long-term funds to go into key sectors of the economy and to help rebuild the economy. That is not happening. One of the major concerns that I hear from the PFAs is the absence of attractive asset classes, the absence of credible investment, infrastructure bonds, for instance. So I was going to ask you, how do regulators like you work with other regulators and policymakers in government to crystallize these asset classes and bring them to the market?
Oh, thank you very much. I think this is a very interesting question. And this is a question that we have been really, trying to answer here, at the SEC. And the answer is simple. If you essentially match the requirements of investors, what do investors require? Investors require a good rate of return. Not even a high rate of return, but a good rate of return that compensates for the effects of inflation, okay, that is sustainable, and that they can, actually, invest, their monies, in over a long period and really see some kind of capital appreciation.
Yes, sir.
Now, the market, needs to have infrastructure, kind of funds that address the infrastructural needs, of the country. And we have two of them. I would love to be able to ride a train from Lagos to Abuja.
Yes.
Maybe during that process, maybe a 6-hour trip, reading a book or doing some kind of work, okay, which is something that you do actually in a lot of other countries today.
Yes.
In Nigeria, you still have to use either, air transport or road transport to be able to move from Lagos to Abuja.
Yes.
If you can have a project that brings a rail line, between Lagos and Abuja, and between Abuja and other cities, you'll find that it will be really highly taken up. Right now, we have airlines that are not really the most reliable in terms of timing. Okay, if you have a train that can leave Lagos and arrive, say, before breakfast in Abuja, and you have one that leaves Abuja and arrives Lagos, before midnight, many people will just commute to Lagos for the day and go back.
That's right.
The same thing with hospitals. We pay a lot of money to go to foreign countries, check into a hospital. Of course, you have already paid, the cost of a visa, the cost of air ticket, the cost of hotels, just to go maybe for 2 days or 3 days to see a doctor. Okay, because you have some very important, procedure that needs to be done, and you probably do not have that facility, in Nigeria here. Now, if we can deploy our assets to create these kinds of infrastructural projects, I mean, investors are willing to actually invest in this asset and get payment gradually over, the lives, of those projects. And this is what really happens. Hotels, nobody builds a hotel, just out of, pure cash. That is out of own money. People borrow, and people borrow because they know that the project that they wish to finance with this borrowing will bring returns that will more than compensate for what investors are looking for. Okay,
yes.
So I think what we need to do is to have these kinds of funds. And I'm happy to say we are already having market operators that have seen this opportunity and that are beginning to create these kinds of funds. But I will say that we need even more. We need even more of them. So we are working with different regulators to see how we can essentially provide the incentives that these kinds of fund managers, need to have, how we can craft regulation to make sure that investors' interests are well protected, how we can protect from overvaluation, of these funds, but these things, are necessary. But the good thing is that they are beginning to happen now.
Precisely, sir. Thank you so much, sir. Thank you. I think there will be a very significant role in this regard for policy making, because one challenge you have today is, or what is required, will be to fast track the pace at which infrastructure is taken from the state and taken to the market. If you look at the plan to concession the airports, for instance, it's been on the drawing board for so long. If you look at the requirements for infrastructure concessioning, it's so long that without having to amend relevant laws and then maybe have an agency that is free, a government agency that is free to do this, we may continue to just spend a long time. Let me take you to one important area of discourse among investors in Nigeria, and it is the question of unclaimed dividend, which some have cited as a disincentive. What are you hoping to do to resolve all the issues around identity management so that this whole matter of unclaimed dividend does not remain a sore point in the market any longer?
Thank you, Frank, for this question. And I think it's really a disappointment that we have unclaimed dividends, on the scale that we have in this country. And we actually even do have unclaimed dividends on some relatively new issues of securities. This is really amazing. So we thought it was really a problem of the past. But you have new issues of securities that just came into the market not really long ago, but you already have unclaimed dividends, on those securities. So I think there is a fundamental problem, in Nigeria. And one is really this issue that you mentioned, identity management is very, very important. We are doing, a number of things, first of all, we have mandated all CMOs to update, their KYC information on their respective clients. We have also continued to engage with relevant agencies to harmonize identity management systems and processes within the market in line with the drive to create a seamless investor experience, for our, investors. And we also plan to liberate the BVN. The BVN is an identity management initiative that has had surprising impact, in this country. And remember, Frank, the capital market transaction starts from a bank account.
Yes.
If you don't have a bank account, you cannot actually buy anything in the capital market today.
Precisely.
And it also ends, the process ends in a bank account. So basically,
Yes.
when you get your dividends, when you get your distributions from any other investment that you buy, these distributions get you onto your bank account. So
Yes.
if that is the case, you then have one good infrastructure on which to really, put your identity management system, so we are working with the central bank and with other agencies in the capital market to make sure that we have an identity management system that leverages the BVN that is unique in the capital market, so that you don't have to basically have different KYCs, with different registrars, with different stockbrokers. Okay, you have just one identity, and really that is me. If I come out on a Friday, it is me, Lamido Yuguda. If it is Monday, it is me. It's just because the day has changed. So the same thing, if I go into my bank, it is me. If I walk into my stockbroker's office, it should be me. It shouldn't be any different. So once you understand these principles, you find that it is possible to have a unique identity management, infrastructure, and a unique identity for each particular customer. So right now we are working on identities not only for the investors, but we're also working on identities for also the issuers and different other, market operators. So these are, still at an early stage. We're engaging the operators, discussing with them. We have seen different kinds of identity management approaches, but we're trying to harmonize them into one single one. And I can tell you that within the next 12 months, we will come up with something that I think the market will really applaud.
Thank you very much, DG. As we bring our conversation to a close, I think it would be unpardonable for me not to ask this question that relates to how we are all working together at a very difficult time in global history. The Capital Market Support Committee on COVID-19 has been working to help mobilize funds to support government efforts at combating the virus. Would you want to speak to this as a shining example of how private sector and public sector can collaborate at major intersections to deal with common threats?
This is the Capital Market Support Committee is an initiative of the capital market, and it's really just an attempt by the capital market to say we should not leave the government alone to fight this pandemic. We are all in it together, and we should all contribute in order to help the government and our citizens to really ward off the effects of this pandemic. And there was voluntary contributions from all capital market operators and from staff members, of respective capital market, operators and, the regulator, to say that, look, we are giving this out of our own free will to help the government to fight the pandemic. And we have done a lot in that respect. We have distributed ambulances, we have distributed face masks, infrared thermometers, name it, face masks, everything. And we have basically gone a step further to say we should establish a healthcare infrastructure fund that will actually provide the seed money for a fund that will provide healthcare facilities, in this country. Now, this fund is still in its infancy. It is on the drawing board. We are still working on the structure. Okay, following with the relevant details will be released to the market. But I think this is a very strong way. People did not look at profit in this case, because remember, a lot of capital market operators really suffered during this pandemic. But still, they gave out to make sure that the capital market is there to be counted. When the list of contributors to this massive fund that is required to help Nigeria fight this pandemic, is actually read out that the capital market is really there, very prominent. And I'm proud to say that we are really very happy that we have done this, and the various agencies and government institutions that we gave out this help to were actually very, very appreciated. And I think all Nigerians should really rise at a time like this to support the country. Government cannot do it alone.
Thank you so very much. My guest, ladies and gentlemen, has been Yuguda Lamido, Director General of the Nigerian Securities and Exchange Commission. Please help me in thanking him for his calm and illuminating responses to my question. We wish you well, sir. Thank you very much.
Thank you, Frank. I wish you a very good day.
Pleasure, sir. Thank you, sir. I'm sure we will be transiting, and my colleague Rolly will take over from here. I know that we will now be following with a presentation by Haruna Jallo Waziri, the CEO of the Central Securities Clearing Systems PLC, who will shortly take the podium to speak to the gathering.
Thank you, Publisher, Mr. Frank Aipogun, and a big thank you to the Director General of the Securities and Exchange Commission, Mr. Lamido Yuguda. It was a highly engaging conversation, and we look forward to your plans on transforming the Securities and Exchange Commission. We would now be going for a 1-minute break, after which we would be going straight to the panel discussion, the first panel discussion for the day. Thank you.
For us, I think we've succeeded in setting up the right mix of people. After people, we have the right mix of processes as well. After processes, we set up, a bouquet of products. These products, you would agree with me, should be dynamic because we operate in an ever-evolving environment. After product, we looked at partnerships. For us, partnerships are very important. A business would never continue to be a going concern if you don't talk about profit. So I think that year on year, we've made decent profit. I must say to our staff that we are proud of you. You've been a good, addition to the family. And to our clients and other stakeholders out there, we say congratulations to you as well for partnering with us throughout this journey. We hope that as we move into the future, you will continue to partner with us. Congratulations, commercial partners.
At this point that we would not be taking the presentation from the CEO, CSCS, Mr. Haruna Jallo Waziri at this time. Rather, we will be proceeding to the first panel session where he would be able to share his plans for the CSCS with us in detail. We would like to encourage our audience to make use of the Slido feature in directing your questions to the speaker. We would, the hashtag for the Slido is BDCM, hashtag BDCM. We would also be sharing a poll with the audience shortly. It will be coming up on your screen. Please take a minute or two to answer the questions. At this point, I would like to hand over to the moderator for the first panel session, Ms. Omobolanle Adekoya. She is a partner at the PwC Nigeria. The first panel session is Row Your Boat, an investor's guide through choppy markets. We will now be handing over to Omobolanle. Over to you. Thank you.
Thank you, Rolly. It's a pleasure. It's a pleasure to be here and to be part of this wonderful occasion. A lot of things have been said so far. So before I go on, I would like to introduce our distinguished panelists for this particular session. We have 4 panelists. The first person, which we have already heard is around, is Mr. Haruna Jallo Waziri. He is the Managing Director and Chief Executive Officer of the Central Securities Clearing System PLC, and that's CSCS. He has 3 decades of experience around the capital market. He is financial market expert, specializing in deal origination, investment manager, investment management, and his role as a CSSC PLC is to provide strategic direction to develop them in the 5 strategic pillars they have, which includes things around technology, includes things around customer satisfaction, various partnerships. Before joining the CSCS, he did, start his career at the NSC. So as I mentioned earlier, he's a seasoned financial capital market expert. In addition to that, he's worked at Afri Invest West Africa, which used to be Sec Trust. He has also worked at Kakawa Discount House. He was MD CEO of UBA Stockbrokers. So there's a lot of experience, and we're very happy to have you here with us to share your insights. He also sits on various boards, which include places like FSDH Merchant Bank, the Nigerian German Chemical PLC, Oakwood Protea Hotel, and and other boards. So you are very welcome, Mr. Haruna Jallo Waziri, to this panel. Welcome, sir. The next panelist I would like to introduce is Mr. Uche Val Obi, SAN. He is the managing partner of Alliance Law Firm. They are a capital market, investment, corporate finance, energy tax, and fintech firm. The firm is the current holder of the Best Banking and Finance Legal Team in Nigeria 2019. Congratulations for that. He also was one-time chairman of the Capital Market Solicitors Association and is presently the chairman of the International Trade Law Committee of the NBA section of Business Law. He's a notable contributor to the World Bank, and IMF Ease of Doing Business in Nigeria publications. You're very welcome, Mr. Uche Obi, SAN. We're very happy to have you here today for the managing partner of Alliance Law Firm. Well, good morning, sir. I think you're on mute, Mr. Obi. You're on mute. You might need to unmute.
Thank you very much.
Thank you. The third person I would like to introduce for our panel today is Ms. Ete Ogun. You're very welcome, madam. Ete Ogun is the managing director of Ancoria Asset Management Limited. She used to be, she spent quite a number of years, at Ernst & Young. She has over 16 years experience working in these various areas. She's also got a banking and funds experience, following her career at Stanbic IBTC Asset Management as a portfolio and relationship manager, and then going through the ranks to become head of fund operations. Prior to that, she's also a member. She used to work at Planet Capital Asset Management, and she's also a chartered accountant like myself. So you're very welcome, madam, Ms. Ete Ogun. You're welcome to the panel today.
Thank you.
Thank you. And last but not the least, I'm very pleased to introduce Mr. Nnamdi Iwizu, who is the co-managing partner and executive director at Commercial Partners. He was the vice president and head of fixed income trading at Citibank Nigeria. He's worked in various areas dealing with helping with deals around the bond market, extensive debt securities experience, Eurobond securities experience. He has he has worked around on various deals around the world. He also has previously worked at Zenith Capital, which is now Phantom, as we all know, an investment banking subsidiary of Zenith Bank Group. He has various experiences working with Financial Dealers Market Association and being a contributor there and giving various insights. So we're very happy to have you as well, Mr. Nnamdi Iwizu. Welcome to the panel. As earlier mentioned by Rolly, my name is Bolanle Adekoya. I head the Capital Market Accounting Advisory Unit for PwC in West Africa, and I'm happy to be your moderator today. So before we go into our main crux of the discussion, we wanted to take some questions, but we'll start with the first one. So we're going to have a poll that we would like to sort of take. We've heard a lot of things in the from the previous distinguished speakers about the progress, or maybe not so much progress, that we would like to have made with regards to our capital market. But we know that these things are affected by a number of macroeconomic factors and some things around pricing. So the first poll that we would like to take, the first question for the poll is, will the recent shock reforms of electricity tariffs, so for example, we would have heard that the electricity distribution companies have moved their prices from 29 naira to 57 naira in some places. VAT increase moving from 5% to 7.5%, as well as the removal of petrol subsidy, which of course has caused petrol prices to skyrocket to between 160 and 162 around per liter around Nigeria. So you will see on your screen, do you think that this recent shock reform will be a net benefit for Nigerians in the long term? So your answer, please answer whether it's yes or no. So it will come up on your screen. Please answer yes or no to the poll that's coming up. Attendees can access the polls using the Slido BDCM. So there's the code BDCM on the slido.com. So remember hashtag BDCM, and then there is a website, slido.com, which will allow you to answer the poll. Please take a few seconds to just answer. So I'll ask the question again. Will the recent shock reforms around VAT increase the shock removal of subsidies, which is cost increase in petrol prices, as well as the significant increase in electric tariff? Will it be a net benefit to Nigeria? Please answer yes or no. Okay, so we'll take the results of the poll later on, but let's move into our discussion today around our panel. So the theme of this particular session is row your boat, an investor's guide to choppy waters. And the truth about it is that we have heard a lot of mixed information today about the different things that are happening. And with the panelists today, the first question I would like to ask each one of you is, these are uncertain times. Even before the pandemic, there was a lot of question about the fact that we had a very sluggish economy with growth struggling around 2%, Naira devaluation. There's been a reduction in FDI, foreign direct investment, of about 7% in the last, past few years that we've been working. Do you think, yes, and there, only 400 accounts, on the CSCS, with 150 million, sort of adults around of investment age. Do you think enough has been done to encourage all types of investors to take that leap into the capital markets? So I would like to, start with you, Mr. Waziri. What are your thoughts around that question?
Okay, thank you very much. I like the precedence of discussions before this hour, or rather the precedence of speeches and opinions before this hour panel. But let me start by correcting some of the things I'm seeing on the chat and the things that have been mentioned. There are actually about 13.4 million accounts at the CSCS. Around 8.5 million are not have not done a KYC under a brokerage account. About 5 million of those accounts are under brokerage, just under 5 million. But what's interesting is that in the last 7 years, only 564,000 accounts have traded. So, we have a huge amount of, account holders who have created an account, who own shares, but are, if you like the word, dormant, are not active in the way that they trade. So that's the first thing I want to correct. Now, in terms of what I think around the structure of the market, and I always like to use the analogy of my teenage son, who, when I try to explain to him what happens or what I do on a daily basis in the market, and the thing that caught his attention was that, Dad, how can you have a T+3 environment? How can I sell my shares and not be able to access my money until 3 days after? Are you sure I'll be able to participate? And that kind of tells you, with the stats that the DG had actually mentioned, where it's been, mutual around the community, that there is the average age of a CSCS account holder is above 50. Maybe it was even higher. Now, what we should look at is also the velocity of new shareholders who come onto the platform and check their age. We're looking at that data. We'll make some pronouncements or announcements based on that. But by and large, what we need to do is to begin to look at what are the things or the hindrances that clog the whole market as a whole. So things like issuers who want to come and say, how long will it take for me from start to finish for me to raise capital? What's the alternative? So today, an issuer can spend anything between 6 months to 1 year in order to raise capital in the capital market. While if he goes to a bank in 1 week, he can raise that money. So, those are the little things that, we have to look at from a process perspective, from a structural perspective, that, both from the investor side and from the issuer side, because the two have to come together for you to have a market, that we need to address. I like what the DG said, and even what the CEO of the stock exchange had mentioned in his opening speech, that there is a wake-up call for us to take a look at the market structure, take a look at the way things are done, take a look at the processes that are required to begin to attract a situation where entrance and exit on our market should be simple, straightforward, and also exciting. Thank you.
Thank you, Mr. Waziri, for that. That's very interesting. Ms. Etel, will be interested to hear your thoughts around that, because you deal with investors on a daily basis. Do you think enough has been done? We talked about the barriers that Mr. Waziri had just talked about, hindrances. But what are your thoughts? Has enough been done? What else can be done?
So to be clear, there's always room for improvement. Have we done everything that we can? The answer is no. Have we done enough? No. But are we doing something? Yes. And everybody is doing something. So I will take it up from the SEC angle. There is some form of literacy program that SEC tries to do. So they try to engage clients enough that that there are certain things that when things happen on your accounts, you can go here. Their complaint framework, tries to sort that out. On the fund managers leg, we have the Fund Managers Association of Nigeria, which is like a pressure group, where it is that we're expected to come up with initiatives, discuss with the regulator on how to push this industry forward, make it better, more accessible to people. Having said that, I think that financial literacy we need to do more on financial literacy, because it will go a long way to ensure that these reforms that we're doing, they have the impacts that we desire. And it's across all cadres, for everyone. We need the financial literacy. That way people can begin to think about real solutions for the Nigerian market, the things that would impact and cause there to be a change, the sort of change that we need. So listening to the DG speak, I'm like, really a lot is being done on the ground. There's so many things being done, but the process, like Mr. Waziri has said, needs to be fine-tuned. A lot of clients complain that the bureaucracy involved is too much. And like you've said, the average age is about 50. A lot of people who want to trade are above that age, but when they come up with the bureaucracies, they're like, I don't need this, I will just leave it, right? Because they don't need it. But we need them to trade, to make the market active, so that young people can see that there are benefits within and they can come in. So I think it's a collective thing. It's not the best yet. There is a lot of room for improvement, but kudos for the people who are working in the background to ensure that these things are happening. Thank you.
Thank you. Mr. Obi, you know, as a lawyer and with what your firm does, you actually work from the investee company side, so you've seen a lot of it. So it'd be interesting to hear your thoughts from the investee company side on whether there's been enough done to encourage investors, because you're working with people who, from their point of view as well, want to see a change, want to see speed, want some of these barriers to go down, and probably want to also get access to more investor types. So what are your thoughts? Has enough been done, and what are your thoughts around what else can be done?
Thank you for that question, Bolanle. What I appreciate. We all recall that prior to COVID-19 pandemic, oil prices were relatively leading to a downward review of the nation's budget. That's a pointer to where we are. Under such uncertain scenarios, investors seem to hold back and trade more carefully. When such situation is further compounded by an unprecedented pandemic that literally shut down global economy and triggered general recession across the country, would naturally, very, very steep. And investors will not have any option than not being bullish anymore.
Mr. Uchobi, I don't know if it's my network. I can't, your line has frozen. Okay, so whilst we wait for him to come back on, can I to, okay, sir, we lost you for a little some seconds there.
All right,
Can you hear me?
Yes, I can hear you. Can you hear me now?
Okay, yes,
all
sir.
Right. Yes, I was simply saying that when such a situation is further compounded by an unprecedented pandemic,
okay. Okay, that's fine. Mr. Irizu, Mr. Nnamdi Irizu, with commercial partners, I mean, similar to what we have heard today, I'm sure that you are probably seeing a change in the type of investors that you're seeing. So it would be good to hear your thoughts as well on whether enough has been done and whether there are some untapped opportunities that we haven't sort of looked at.
Thanks for the question. So with regards to opportunity, that I think that we are still basically suffering from the 2007-2008 stock market crash. And I think that in the psyche of a lot of the younger ones, for instance, that they are still reeling from the losses from back then. I think that a lot more can be done around basically trying to sensitize the investing public on the advantage of the stock market, on the fact that it's a long-term investment. Because I see that what you see with a lot of investors is that basically they're all thinking short-term. People want to go into, you have people who come in and they say to you, oh, I need to possibly put money aside for 90 days and I'd like to invest in the stock market. And you say to them, the stock market is more of a long-term play, not a short-term play. So we on our own always try to basically educate investors around this. And I think that this is something that would be good if we had the NSE and other capital market operators basically trying to do a bit more work around this. We need to shift the paradigm of your average Nigerian investor of just short-term investments basically to long-term. When we start to do that, then we will start to see a lot more traction with regards to the capital markets. And then also, you possibly also start to see the age of the investors come down. I can bet a lot of those retail investors over the age of 50, and most of the people who invested years ago, it will be interesting to see what the age of the investors over the last, say, 3 or 4 years have been, to see if you're getting a bit of younger people coming to the market. But a lot needs to be done around sensitizing them and having a paradigm change, a paradigm shift around the whole investment horizon, investment tenor, risk appetite and all. So I think there's still a lot of work to be done there, even though I must say that the NSC has tried so far in terms of trying to boost investor sentiments with regards to the capital markets. Thank you.
Thank you. A lot to be said there, and it's very important as well that we do give kudos to the NSC as well as the sector. What some of the things that they are working on, as we're seeing that develop over time, and in the long run, it will pay off. I would like to go back to Mr. Waziri. I mean, one of the things I would like us to do is to give you an opportunity to talk about some of the initiatives that the CSCS is working on, because at the end of the day, the CSCS has a very significant role because you're the one sort of managing the ecosystem for the investors. You keep the investor account. When there are switches sort of going on, these things have to go through yourself. Earlier on, you had mentioned about, we had heard things about looking at things around KYC. Earlier on, we heard the DG talk about unclaimed dividends. There are a number of things that are going on. So, Mr. Waziri, it would be good to sort of find out what are the initiatives the CSCS is working on to try and improve the active participation of investors in your current ecosystem. You already gave us some numbers about the fact that even though you have 13 million accounts, only 564,000 of them are currently active, while some other people think it's lower than that. Over to you, sir.
All right, thank you very much. So let me talk before I talk about because there's synergy between what we're doing and what we're seeing in the market. When the market was booming in 2006, 2007, 2008, I didn't see any investor education beyond that. The market was where you could put money and make some more money. All right. There are 3 stages in the life of CSCS that we saw traction in the number of accounts that were opened. Number 1 was when the federal government was doing privatization, based on the TCPC guidelines. We saw accounts being opened at the CSCS jump from, I think, 1.6 million to about 5 million. The second stage was when the banks were doing the banking consolidation, where banks were raising capital, building their balance sheet, and we saw the jump between that 4.5 million to about 9 million. Now, these are 2 instances of shocks that occurred in the market. 1 was privatization, 2 was banks raising capital, and that was where we saw the biggest jump in terms of account open at the CSCS. So we need to have those kinds of shocks in the market to bring people out of their comfort. Now, what do we need to do? Number 1, that I think, which is a focus to us, is to begin to look at our operations from end to end, improve on the processes. So if something takes us 1 week to do, can we bring it to 1 day? If something takes us 1 day to do, can we make it 1 hour? And if it's 1 hour, can we make it a minute? If it's a minute, can we make it instant? And so we've, in the last 3 years, invested heavily in technology to the extent that we wanted to deal with the issue of KYC. So today, if you want to open accounts in the capital markets, you go to a broker. The broker gives you a form, you fill, he goes in and enter manually the details of what you've given him. And then he opens our own portal and manually enters it. 2 processes that are likely to bring error. 1, he's putting on his own. 2, he's putting on our own. So a number can be 0820 300, blah, 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 blah. And then he'll miss a 0 or something. It's not 11 digits, it's 7. He puts number 5, Bangoshe Street, and then says Anambra State by mistake. So what we are doing to eliminate that is we've built an API with the other management system providers at the brokerage end, such that at any point in time you're opening an account, it goes seamlessly into our systems. But before we accept it, we do 3 validations. 1, are all the fields complete and what is expected to be there? 2, is your BVN correct? 3, is your bank account correct? 4, if you have a CHN number already, we'll have to validate that. So what that does is that it reduces the amount of garbage that initially could occur when we take in data. Because whatever data we have is what data we give to registrars that they will use to pay you dividend or keep your records or do any corporate action as it is. We felt that was very important from what even the DG said around KYC and identity management. That's key to what we are doing. 2 is that, if you look at how we operate today in terms of the efficiencies within the market, we have built capacity now to be able to do T+1. In fact, we could do T+0. So our systems now are ready. We have to look at what market is doing for us to take it to that level. From a risk management perspective, as you know, earlier this year, late last year, Thomas Murray came and did an evaluation of the CSCS, and we're able to move our rating from A to A+. I think there are only 2 other CSDs in Africa that actually have that kind of rating. And that's an indication of all of the work we're doing within the risk management perspective, from operations to capital to processes to everything, to ensure that we have a credible market. From a partnership perspective, we realize that as a market infrastructure, we touch on various entities, and we felt that rather than sit in our offices and consume everything, we now actually effectively go out there to talk to the custodians, to the registrars, to the markets themselves, to even regulators, to say, okay, as a market infrastructure, this is what we're seeing. How can we help you operate better? And how can we make the market better? So that partnership is ongoing. We have MOUs or agreements, partnerships that we sign both locally and internationally to be able to say, what are the things you need us to do? How can we make it better? And that constraint is very important, like the SEC DG said, amongst many things that they want to partner with market to ensure that the market grows. So from operations to technology to partnerships, are the key areas that we currently are investing in. As you know, the CSCS is a market infrastructure, it's an iceberg, all right? You don't see what goes on under, you just see something at the top. And I can tell you, in the last 3 years, a lot of work has gone in. And then the APIs we're building also, we're giving it out to not just brokers, but other data consumers, even custodians, and of course, the registrars are entirely coupled with us through a system called Reg Connect, which we built. It's also a validation system where we exchange data between us and them. And today is an STP system that's up and running. And even that ensures that whatever data we give them is validated. Whatever data they give us before we consume it is also validated. So those are the few, what I call little things, if you like, from an iceberg perspective that are very obvious in the market. Thank you.
Thank you. It's great to hear some of these initiatives, and to be honest, even I'm guessing we're also using some of the case studies from other parts of the world that's happening. So it's very good to hear it, and congratulations on your improved rating as well. I will come back to you. There's another question I want to ask you, but I'll come back to you. Mr. Ucheobi, I would like to come back to you and just sort of, you talked a little bit about some of the improvements that you would like to see, but I want to focus a little bit about the regulatory landscape. So earlier on, I'm sure we heard Eric's comments around what has changed with regards to the reason